Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, switching to my radio voice. And today I'm recording with Sean Merat, co-founder and CEO at owl.co. Sean, thank you for joining me today. How's it going?
Good, man. Thanks for having me.
My pleasure. So we are recording on 4th of July because I am so disorganized that every year I forget to block my calendar for what I like to call minor American holidays. Now, 4th of July is not minor at all, but I still forgot to block it out. So a couple of meetings snuck in, and Sean is more organized than me, I'm assuming, but Sean is Canadian. So 4th of July is just a normal Thursday for you guys. Now, happy Canada Day, which I think was just 3 days ago, right?
A few days ago. Yeah, it was 3 days ago. Yeah.
Perfect. So one of my very good friends, she is the chief actuary of the electric insurance company who just moved from the US to Canada about 3 months ago after having lived in New England her whole life. And she posted, this is her first Canada Day, 2 days ago was, right? And she's an actuary, so she thinks in numbers. And she posted that Canada Day, 4th of July, and the other Independence Days around the world, basically, she did the analysis, and celebrating independence from the UK, from the former British Empire, is the most common holiday in the world. There are about 3.5 billion people in the world that, in one way or another, celebrate independence from the UK. So
yeah, the British did they put up some numbers back in the day.
It's the funny side of the coin of the old saying, the sun never sets on the British Empire, right? Well, right. Yes, eventually in the post-colonial era, what that means is that more than half the world celebrates Independence Day from you guys.
Right. So and their independence as an asterisk, right? Like, but I live in Vancouver, which is part of British Columbia as a province.
Well,
and there's
is Canada part of the Commonwealth? I'm not super clear on that. Like, is King Charles technically King of Canada among his many titles?
No.
Oh, okay.
Yeah.
Okay. Perfect. It does seem that you guys have a little bit cozier relationship with the UK than the US does.
Yeah, because of the history, right?
Okay.
Yeah, for sure. There is. But it is independent. It is politically independent. We have our own prime minister. And
Trudeau.
Cabinet. Yeah.
All right. I visited about 65 countries before ever visiting Canada. And last year, I finally visited first Montreal, and I loved it. And then I visited Calgary, and also really enjoyed it. I have not done Vancouver. I have not done Edmonton, and I don't know if there's any other cities that. but
I don't either. It's a big country.
It is, but 80% of the population lives within like 50 miles of the US, right?
I mean, it's not that populated to begin with. I think it's as big, if not bigger, than the US, the country itself.
Yeah.
But we have I think we're less populated than like 2 states in the US. I think it's like 40 million.
There are some states in the US that are significantly smaller, but given that you guys are a Canadian company, I will switch to my to my Go Canada
there you go
background. Yes, I have this background to flirt with Canadian insurtechs. My day job, I run a recruiting firm, so when the call happens to be with a Canadian insurtech, I tend to do this and then make fun of myself, and they seem to like it. Okay, perfect. So Sean, thank you for entertaining me for a few minutes while my ADHD runs roughshod around the podcast. We always give the chance for the guest to give the elevator pitch. What is owl.co?
Essentially, we're AI shop. We've been an AI shop before AI was cool, really. And the idea behind it is to utilize advanced models in order to provide deterministic indications to the largest insurers and carriers in order to make really accurate claims decision at the shortest amount of duration. So really quick, really accurate, and with conviction. We've been around, so we're one of the leading claims intelligence tools. We've been around now for about 5 years, and I believe we are now serving about 14 of the top 20 carriers in North America, and rapidly growing.
Fantastic. All right, I've been taking notes.
I know everything I said is so broad, but it's, we can get to the nitty gritty of it, but it really depends on what sector we want to talk about. What, it's claims is a long, value cycle. So
I'm a former claims adjuster and a former underwriter, so let's dig into it. Okay, so I was taking notes furiously. Okay, so AI shop before AI was cool. So I'm assuming that you're defining AI was cool as ChatGPT to today.
That's right.
Okay, perfect. Yeah. Because perfect. Because AI,
I mean, you go to a whole lot of conferences, right?
It's all we talk about anymore.
It's all it is. Every panel, every panel I get invited to is like innovation, build or buy, and it's all about AI.
No, it's yes. Like every other podcast episode I do, they claim to be an AI company. It's getting hard for me as a non-technical person to really tell them apart. And every conference I do 30 or 40 insurance conferences a year, most of them InsurTech side, some of them traditional insurance. And yeah, it's all we talk about. In fact, I just got back from one, my last conference of the season. The reason, it's the first time I went to this one. And the reason I went is because they called me saying, would you host a panel on the impacts of AI in recruiting and hiring? And I'm like, yeah, recruiting and hiring are within my ballpark, but AI really is not. I mean, I've interviewed plenty of AI companies, but yeah, just not my thing, right? So I ended up talking my way into a media pass, and they ended up getting one of my great mentors, Margaret Reese-Milliken, to host a panel, and she did fantastic. I'm so glad that it worked the way it worked. But it was a perfect example of how every freaking session has to be about AI. Like this session should have been about hiring, recruiting, retaining, and especially women in insurance, because this was a women in insurance conference. And they had to stick the word AI in there somehow, which is what convinced me not to do the panel myself. Okay. Okay, so AI before AI was cool. Awesome. We're recording on July 4th, 2024, which I like to refer to as July 4, year of our Lord ChatGPT, year 2 of our Lord ChatGPT. Because I'm assuming the machines are listening, and if they do take over, I want them to know that I'm a fan. I want to be on
I'm gonna get killed first.
Okay, so if you had to choose, you want to get killed first.
If I get to choose, no, I'd like to get killed last. I just know I've been talking a lot of smack about
exactly. That's exactly. I want our new AI overlords, if things, in case things go wrong, I want the new AI overlords to be. I want to be one of the ones they like. Okay, so so the idea of all.co is to utilize advanced models in order to provide deterministic indications. Okay, deterministic being the keyword there. So that's deterministic.
It's a big word.
Yeah, and I like big words. I'm not a math guy, so in my mind, deterministic means it gives me a final answer. What are you trying to say by deterministic?
So that's actually great that you picked up on that. So there's really two ways you could go. I wanted to be very specific about this, because one of the pillars of OWL from day one was that because we are only going to serve the markets where humans are involved. So we're not going to be in, car insurance or, let's say any sort of like property insurance. We want injuries, humans, and everything around that. And what the reason why that gets complex is that you're dealing with a ton of biases at all times, right? So you have to make decisions based on, you can no longer just go based on profile, right? Whereas you can say, fast cars get into accidents, specific jurisdictions are more prone to hurricanes, and build some form of predictive models. This becomes more challenging when you're dealing with sectors where humans and injuries are involved. So, there's a predictive model that you can build that basically ingests tons of historical data, and in order to predict the outcome of said claims.
Mm-hmm.
And it will work to the extent that profiling does work too statistically, but it's not what we wanted to do. And what we wanted to do at OWL is to in fact have deterministic factors. And by deterministic, what I mean is surely accurate, but more so in the sense that every insight and every recommendation and every valuable finding that we provide insurers needs to be deterministic in the sense that it provides an evidence, it provides a reason for every single insight. It's never just a score or a black box. It's always this is the insight, here's why it's being highlighted, and here's all the evidential data points.
Super important. Okay, in our heavily regulated industry, and I'm not super familiar how it's regulated in Canada, but you're working with insurers in both Canada and US, it sounds like. In the US, with 50 different regulators, 57 different regulators regulating us, and I'm guessing Canada, each province. How many provinces are there? Fair enough. I don't know either. Okay, so with, I want to say 7, but that's Costa Rica where I'm from, so I'm sure Canada has more.
No, definitely. I think it's 10.
10
I believe.
sounds
I'm
about
fact checking
right.
myself. Yeah, it's 10.
Okay, perfect. 10 sounds about right. Okay. So with 57 regulators in the States and probably 10 in Canada, that 67 different regulators, very likely the great majority of them want to see the work. It's a show your work type of situation, right? It's like math in elementary school. We care less about the answer than we care about how you got there, and how you got, being able to show the regulators how we got there and being able to understand ourselves how we got there is very, very important in insurance.
I think, yeah, of course. I think as far as regulation goes, you can always satisfy there's always workaround to laws and regulations, right? So you could always build probabilistic models and satisfy regulators statistically. I think the bigger reasoning is both on the efficacy and the morals of the. I genuinely think that in order for us to improve, and like it's going to be very difficult to improve on predictive models, sole predictive models, right?
Why?
Because you have no way of tracking a lot of the indicators. But more so, I think if we are not able to, or if insurers are not able to very clearly explain to their claimants how decisions or why decisions were made, it sets a very troubling precedent, where this already very distant relationship is only going to get more damaged.
This and the relationship is not only distant, is distant and often adversarial.
Right.
So yes, if I'm paying less for your claim than you think I should, or that the body shop thinks I should, or that the contractor thinks I should, or the hospital or whoever the provider was, I better have a very good explanation as to why.
Yeah, exactly.
Absolutely agreed. Okay, perfect. Okay, so then you really hit on the speed of the so speed is big, but I love that you that you also went not only really quick but also really accurate, because
Yeah.
speed's important. Accuracy is probably more important in our business, right? Okay.
Yeah.
And been around 5 years, which makes you a mature insurtech, so that's very good. You're already in
Yeah.
15 of the 20 top North American carriers and rapidly growing. Perfect. So what does it look like? So if I work at a insurance company that uses Owl as a claims adjuster, what is my experience with Owl? What do you guys do for me, and what does it look like?
Your world's different. I mean, it's actually beautiful that you're a former claims adjuster. So, and I'm sure your audience is fairly up to date. You were telling me about the segmentation. It makes like they'll know the pain point, but I'll give the 30,000 foot, and please
Absolutely.
chime in.
Mhm.
Your insight is just as valuable as mine, if not more. But essentially, why in my view, speed and accuracy for the claims adjuster goes hand in hand, right? Because as the number of claims grow, the number of claims that you need to handle also grows, because you cannot grow at the same rapid pace in hiring as there is in claims. So what happens is more claims are being handled by fewer claims professionals, and so essentially leads to more mistakes being made. Corners are going to get caught unless some efficiency in the process is introduced. So we your life with Owl is going to be very, very different. So the carriers that we work with, we quickly found a few very large universal challenges that pretty much every carrier has. And when we narrowed it down, the basis of it all was the claims adjusters. They need context in order to handle claims. They need data and they need context. Traditionally, probably how you were doing it, and keep me honest, is that you were handling, let's say, anywhere from 50 to 150 or 200 claims per month, and you would get a dump of basically claims data. This could be attending physician statements. I don't know which line did you work in.
I did auto material damage
Yeah.
1 year, and then I did MedPay PIP.
Oh,
So
okay.
yeah, I did medical a second year.
Right. So that's the nightmare that is. So you would receive these tons. I mean, if you're in medical, you would be getting hundreds, if not thousands, of pages sometimes on claims, and the expectation we should talk about that's on the claims adjusters is that every claim that they're going to handle, they're going to have full context of the claim. They're going to have reviewed all these documents. They're going to have, which is not. It's just, and
It's
it's not
nuts.
on the
It's
claims
nuts.
adjusters. The
Yeah.
expectation is that as a consumer, as a claimant, that's my expectation, but that just, it's not even logical,
You
right?
need to be
Because
superhuman. Yeah.
right
Yeah.
now, the challenge is so this is a very big universal challenge that's been the case. So the one of the big problems that we solve for these large carriers is we ingest all of that claims data, whether it's complex medical claims, policy documents, everything in relation to that claim. We're able to ingest it. We segment the documents. Our tool, what it does is it summarizes, the thousands of pages into like a few paragraphs, all the key information. It provides you references, but it's all contextualized within the claim. And all the key data is extracted and then provided to the insurer. So the claims adjuster, what's changed now is that instead of flipping through, all these pages to gain context for hours and hours on, at best, and at worst, just ignoring all of it. With Owl, they would just get a basic summary of everything that's going on, all the key information, and then valuable insights, questions to ask, and what next best actions make the most sense.
Perfect. And best actions
Yeah.
that make the most sense. Yeah, this is fantastic. And we can always dig in and see why it's telling us what it's telling us.
Always. Every sentence is referenceable.
Every sentence is referenceable.
Yeah.
All right. And the focus is injury claims.
The focus is injuries, and the focus is, you know, human claimants, and that usually revolves around injuries. And so you know, 5 years ago when we started, our main focus was disability, long-term disability. Then we expanded into short-term disability. Then very quickly we expanded into workers' comp, then casualty, then BI, auto BI, and so forth.
All right, I'm a believer in what you're trying to do. Absolutely makes perfect sense to me. What does the implementation look like, right? So the listener who is not at one of those top 20 carriers, one of the 5 that's not a user yet, or a medium-sized carrier. So hey, this sounds amazing, but I'm assuming it's going to take me a year and an army of Deloitte consultants to get this thing implemented. What does the implementation look like?
Yeah, it's going to take a year if you have an army of Deloitte implemented. No knock on Deloitte, you know.
This goes for any SI, any size.
Yeah. So is your question, okay, what is the implementation look like?
What is the implementation like? How does it play with my systems? And so how does it play with my systems? And where do I need to be? Like, do I already need to be fully Guidewire, fully Duck Creek for this to work?
No, and I think that's a misconception. So yeah, of course we're you know, working on partnerships with Guidewire and the all the core systems at all times. But you know what's more, and most of our clients would be the blue chip, like the large carriers, like the names that you know you see on TV all the time. And we're just branching into the mid-size carriers just now.
Excellent.
So it's it's very frequent that even if they are on Guidewire, it's like Guidewire 7 or 8 or 9, and it's highly customized and Frankenstein, whereas it may as well just be a legacy system. You know, it's you know, and it's rare to see, you know, a very large carrier that's fully implemented Guidewire Cloud. But even then, it's still going to be highly customized because every insurer has their core competencies and they want to like safeguard it, and therefore they're going to have, you know, all these different tenants. The implementation with OWL is we learned a few things very quick. Year one is that we can't just depend on the IT of carriers because they're InfoSec, IT, legal, compliance. They're always so overwhelmed with so many initiatives. So we actually brought all of that in-house. So we have departments for implementation and integration. We have a department for compliance, and we have a department for InfoSec, and we do the legwork. So we go in and even if it's a legacy system where there's really no API structure in place, which we run into every now and then, we actually build it. So we work with the carrier to actually build that and systematically. And that's been one of the main reasons why we've been able to you know, commercialize our system, I'd say fairly rapidly compared to the market norms, and reduce the amount of the duration for the implementation. We like from the moment that you sign, you could be up and running like within 3 months, even with a large carrier.
Bad.
Yeah,
3 months is not bad. All right, and how much of a commitment am I making? Am I committing to a year? Am I committing to 5 years?
We usually do minimum 1 year, maximum 3.
Okay. What are the clients saying? And by the way, you can name client names if you want to. You don't have to. But what are the clients saying on the ROI they're getting from it?
So there's let's break it down. So one of the so we have really, let's bucket our solutions into two different categories. One is the what I was describing, which is the document processing, which is structurizing, really complex documents, claims documents, indexing it, extracting key information, etc. That the main the ROI, the business case for that is both efficacy and efficiency. Of course, highly efficiency, because 50 to 60% of claims adjusters' time is being spent on reviewing documents, and being able to shorten that, there's a lot of value. Then you have to bring in medical professionals that would be looking at it, legal professionals, vocational specialists. So the business case is actually very expansive, but it's hard to quantify, right? Because no insurer is tracking all of that time, and I don't want to give you BS answers, right? But with the best we've done with our clients, that's very high. The ROI there is anywhere between 18x to 30x, with an asterisk, right? Because it's hard to judge. Like there are many different ways of calculating the ROI there, because there's a lot of things that are sunk cost, and you can't really be calculating it. But that has a very high ROI, because it's such a massive universal challenge that carriers have, and when you resolve that, it's the most transformative change ever. Then our other category of products, it has to do with the insights. So yeah, great, you have the data. Now what are you going to do next, right? And the focus there is in capturing problematic claims quickly. So we call it eligibility monitoring, and releasing reserves essentially back on the P&L. So that is something that we've been in the market for 5 years now, and the ROI is a steady 10 to 15x.
That now we're getting nerdy, my friend, and
Yes.
I'm not an actuary, but I have recruited in the actuarial space, both for temporary and for permanent placement. So I've learned a little bit along the way, and I've gone to several actuarial conferences. Okay. So for the listeners, to be super clear, because we have both like company leaders, and then we get a lot of like young, new to insurance listeners that learn a lot from listening to us. So for the listeners, basically, whatever as the claim adjuster put on the reserve, that money on the back end, Treasury is having to save that. It's having to invest that more conservatively, because we're expecting that we'll be paying that out in the fairly short term. So every year or every X amount of time, I don't know what probably depends on the state and stuff, but every X amount of time, the actuaries are reviewing the aggregate information, and either modifying the aggregate number to save more money, or if claims have developed better than expected, maybe they are releasing. And so releasing is really good news for a balance sheet, basically, and it affects everything. We can be better priced next year if we can be more competitive in the market next year if our claims have developed better than expected. So yes, any improvement, and I don't speak like I know this kind of at the 30,000 foot level. I know like what the effect is, but I don't speak actuary or CFO. But I do. The big thing to understand this is, in my understanding, correct me if I'm wrong, but any improvement to the accuracy of our reserves is really, really good for our balance sheet.
That's right. Yeah. I mean, that basically is all of insurance right there. Because because it sounds like a very basic, indicator, but it's actually very, very complex. Actuary and sciences is a very old, one of the oldest sciences there is, and it's complex. And getting to that accuracy, it's a never-ending endeavor. But yes, that accuracy of being able to more accurately price your reserves is essentially what's going to cause an insurer to win or fail.
Fantastic, and I think the decision makers in our listenership would agree with that. What is the origin story? Where did how was this owl hatched? Where did the egg come from? I'm trying to think of what else do I know about owls. What is the origin story of owl.co? How did you figure out that this was needed and that you guys were the right people to do it?
Good question. Actually, we kind of backed into it. The backstory is my background is not in insurance. My background is in tech. So my entire life for the past 20 to 21 years almost is in building and exiting various startups. I've had 4 successful exits, and and my previous company was a KYC AML focused company that's know your customer, anti-money laundry for regulated sectors. And that company did really well. We grew it to about 200 million a year in revenues. And I took it public before exiting to start Owl. And what I knew I want to do with the team is that I wanted to build something, the next generation KYC tool. And essentially we came up with a really, really sophisticated technology that is able to aggregate external data. And by that, I mean publicly available data in order to build a really colorful profile of every individual. Because my belief was, having just a few random, lists and checking people against lists is not enough. Anyway, so we built that technology, and I was pitching it to shouldn't name names, but I was pitching it to one of the chief operating officer of one of the largest banks, and he basically was listening to the pitch, stopped me halfway and said, Sean, this is not going to work. Like, stop. You're embarrassing yourself. And essentially, his comment was, the banks are not going to have that level of scrutiny in their KYC workflows because then no businesses would get in, right? But then he said, but this technology that you've built could be used on one of the biggest problems on my P&L, which is on the disability side. And this was a bank that actually has a big disability insurance arm. And so this was the first time that I had heard of the problem, and then went back scratching my head, getting a bunch of advisors, really going deep into the problem. And then I learned so much, right? I learned all of this, the problems that currently exist. So long-term disability is a bit of a different beast because some of these injuries are, lifelong. Some of these, 10 years, 20, 30 years. So the reserves are massive. The reserves, the hundreds of thousands of,
work comp is basically unlimited, right? It's statutory, right?
Exactly.
A quick example, the largest account I wrote at the last big national carrier I worked for, a couple of months after opening, a worker suffered a workplace accident. A valve malfunctioned, and he got 80% burns. And he survived, and permanently disabled, of course. That claim is going to be millions of dollars of medical bills over his lifetime, right? Like the policy is not limited. It's whatever the state says we owe.
And then
so it gets crazy.
If there's attorney involvements and there's litigation, I mean, those go through the roof, right?
Absolutely.
so yeah, so that was the first time. That was that was the kickstart. And what we did is we essentially made a pivot, very early pivot. We had a very capable team that we've worked with before, and then we brought in our CTO, who used to lead very large teams at Facebook in New York back when they were called Facebook, and assembled a really, I would say, the Navy SEALs of engineers in New York. And now we have 3 offices: Vancouver, Toronto, New York. And we basically piloted with that same bank for the product. And in the very V1 of that release, they saw 17x ROI, and that was like really early on. And essentially all it was at the time is that we were aggregating external data. And the idea was, okay, so you have half of the context. Insurers today, the ones that are not working with OWL, really have half of the context, right? Because they are looking at a claim and it's a puzzle, and they're trying to put the pieces together, but they're looking at the documents at best and trying to put understand what's going on. What OWL does is it actually brings you a wealth of context from external available data sources, so all of internet. And there is a whole wealth of info out there on claims, on claimants, that are going to be material on the decision making. And so when we bring that to the forefront, all of a sudden what surfaces as problematic or ineligible claims, you can just make determinations very quickly.
There has to be, when I imagine you looking at the results of and you've done this entrepreneurial thing before, right? You're multiple times startup founder, tech startup founder, and you look at the ROI from this first deployment or this first POC, and you have to be like pinching yourself. You're like, this cannot be real.
Yeah.
This is an incredible result.
Yeah,
Amazing.
absolutely.
Amazing. All right. The name. How did you come up with the name OWL?
Do you want the truth or the BS story?
Both.
I'll give you the BS story. It's because we're claims intelligence and monitoring, and owls are always in the jungle monitoring their prey. But that's a BS story.
Okay.
The true story is I just had the domain and I thought it was cool.
Oh, you already owned the domain?
Yeah. And
okay, you might have just answered the nobody, like 500 and some episodes, and I've always wondered why so many insurtechs are named after animals, and you might just have solved that mystery. Apparently tech founders go and buy animal name domains and then figure out what to do with them later.
That's amazing. But I'm willing to bet the ones that have animal names are the ones that are probably direct to consumer.
Probably, yeah, probably. You're correct, and you guys are not direct to consumer.
Yeah, we're like, we stand fairly alone. Like when we go to conferences, we're the only ones that has like such a brand. Like it's always very enterprise names and all, and like our website looks like a nightclub. It's and I like that about our branding.
So definitely check out the website, people. owl.co, OWWL.co. The logo is very clean, and yeah, the website is very cool looking. Lots of information there. Before we start recording, I mentioned that you've got the best profile photo on LinkedIn. I used to think mine was the best. Now I'm thinking mine is the second best.
Which is pretty cool.
And that's my business card also, by the way. It's an actual playing card because I am a magician.
Oh, you are?
So it is.
Why are we talking about me? I have so many questions for you now.
If you guys have a podcast, I'd love to come on it. This is supposed to light on fire, but I haven't loaded it this morning. But normally this lights on fire. And then
you should start every episode with a trick.
I should. I definitely I do go to a lot of insurtech conferences and do tricks. It's how I market both the podcast and my recruiting firm.
Yeah.
And but yes, my business card is basically this thing, and on the back it has a QR code with my LinkedIn, and it has the very ADHD thing of all the things that I do, including the podcast, including recruiting, including the book, including everything. And including the last one says magician, and it has my top hat and the like the playing card symbols, like the four suits.
That's fun.
Okay, so yeah, I think that within the insurance world, at the very least, within the insurance and insurtech world, we are gold and silver medals for coolest profile photos. If editor Tony remembers, I'm trying to make a note for myself, I will show your profile photo. But basically, for the listeners who are listening to this on audio, the profile photo is Sean with a fantastic smile holding an actual living owl. This thing is clearly not like a stuffed owl at a museum, not a stuffed animal, an actual owl. So the story, how did you end up holding an owl for this profile photo?
The real story is we were just going to do our corporate photos, and I'm always trying to be different, and we're trying to find cutting edge ways. Like, let's not be boring. We don't want to be a boring company. And then I just had this thought. I'm like, what if we got an actual owl? And then everyone said, there's no way to get an owl. And then my EA, sure enough, called a zoo here in Vancouver, and it turns out that you can pretty much rent any animal that's at the zoo, if you're willing to go through the process and pay the expenses and everything.
Okay.
Yeah, it's a whole revenue stream for the zoos. I didn't know this.
And now the process. So I love learning this, by the way. But the process, I'm assuming the process is not like the check cleared or the transfer came in, so we're gonna go ahead and put the owl in an Uber. So what is the process like?
Oh, it's like, if you can imagine like an A-lister celebrity, if you wanted to bring that person in, you know how high maintenance? Now multiply that by 10, because now like you have to think about, like, the zoo is taking liability for this animal, and they're getting paid to bring this person. Like, the worst PR for the zoo is if they try to make money hurting an animal, right?
Quick pause there. If any listener works at an insurance carrier or at Lloyd's of London and underwrites this kind of risk, underwrite sues for taking animals out for an event coverage, whatever that is called, I want to have you on the show to talk about how this works. Anyway, continue. Okay, so it's hilarious. Like a celebrity. So I'm an insurance nerd. I can't help myself.
Yeah.
Okay, so what was it like? Like did they have like how does the owl show up? What is it like working with them for this one photo?
So yeah, so first things first, they take your money, and then they give you a price, and they give you a checklist. So for the checklist, the photo studio that you go to, they have to vet it before they come, and then they have to have like a separate room that's isolated, that's very quiet, that there's no lighting, so that the owl can take breaks. The owl had to take breaks every 15 minutes.
So the owl's union, basically.
Yeah. No like we could do flash photography, but like very finite number of flashes per 15 minutes.
They're nighttime animals.
Yeah. Yeah. A lot to do with breaks, and if it's cranky, it would end the session. And I mean, it's a wild animal.
How does the handler know that the owl, how does the owl handler know that the owl is cranky?
Just like all this zoo, like you've noticed, like when you go to the zoo, the people that are there that are handling the animals, they just know these things. I mean, they live with them every day, so they actually have a bond. They understand all the behavior, and I guess they're pretty in sync.
All right, that's a super cool story. So how long?
Yeah.
How long was the owl with you guys for this one photo?
I think like 6. No, it wasn't this one photo. So all of the staff at the time took a picture with the owl. And it took a good 6 hours, I believe.
Holy crap.
Yeah,
Okay, so this oh my God.
it was a whole production.
This is fantastic. Thank you so much for this. Might be my favorite side story. Uh,
I'm
when we
glad you
talk
like it because I bled for that photo. Like this, the owl has an incredibly sharp, sharp phallus.
talon,
Yeah,
but you're
and
wearing a glove.
I'm wearing a glove in that picture. But then I just had this genius idea, being the not so smart person that I am, that let the owl sit on my shoulder. And it ripped through my blazer. It caused like I was like
So
bleeding.
okay, so when you said, "Hey, one last thing, can I have
Yeah,
it sit on my shoulder?" Did the handlers start like maniacally laughing their butt off
they warned me.
because
Is that the handler said, they are very sharp. Like you're gonna get hurt, and I'm like, haha, it's okay. It's anything for the photo.
okay, in the U.S. uh, somebody would have intervened and said, "Our insurance doesn't cover that," right?
Yeah,
And they wouldn't have let you.
but I
But
would sign a waiver. I'd
it,
still
it,
do
it in a more civilized country like Canada, he warned you, and he's like, "Yep, no worries, we'll let you bleed."
it. Yeah, yeah. No, and the pictures are actually pretty funny, but I was trying to not scream because they told us, don't be loud around the owl.
Uh-huh.
But yeah, it hurt. So I'm glad the photos turned out nice, because I like to say I bled for those photos.
No kidding, no kidding. Bleeding for talk about bleeding for the company. Whenever any investor in the company is giving you any sort of hard time, be like, I have bled to make you money in this company. I don't want to make you late. It's 3:56 Eastern. Thank you so much for your time today. This has been a wonderful conversation. What you guys are doing is definitely very important. It sounds like you're doing it very well. So look forward to see you continue growing this. Yes, the problem of uh medical what's it called, medical records in a claims environment where the claims people are perennially, endemically overburdened with way too many pending, and they probably are not people with a medical background, right? Like I got great training in biomechanics and in like how injuries happen in auto accidents when I was at Nationwide, but I'm not a former nurse or something, right?
Right.
And somehow we have to figure out not only coverage, not only does this type of injury make sense for the type of accident that happened. You'd be surprised how often it doesn't, uh,
Right.
and also do some level of analysis of a very complex and very long medical records,
Yeah,
and make the right decision. And yes, this tool would have been amazing. Uh, so thank you so much for what you guys are doing. Hopefully, I'll run into you at one of the conferences out there.
for
Yeah,
sure.
thank you for being willing to record on the 4th of July. Thank you for your time.
No, thank you. Thank you. Really appreciate the time. And thanks for having me on. Next time, I want to see a magic trick.